Hey guys, how's everybody doing? Thank you for being here. Let's share the screen. Still can't believe I did a 40-minute live screen without sharing the screen. I mean, I can totally believe it. Anyway, anyway. All right. Let's look at the market now. It bounced just like I thought it would, hoped it would. I mean, but I also at the same time, let's look at the SPY. Well, I said there's no way we don't at least test this gap. And we did. We got about a third of it. Not a very good test, but the bulls bought it, and they're going to close us on the other side of the gap. So that's a great, just from an order flow standpoint, to close us out of that gap. That's huge, or it looks like they're trying to. Now, unfortunately, we had a bearish gap created this morning. Also, let's see. And we're also right in the election night. We're right there at we're just trading within that November 6th election night area. It's good news that the Bulls sent us out of it for the most part. I was glad to see that. We don't want to if we would get price accepted underneath here, and then if we would have rallied back up into here, there probably would have been sellers here, and that would have flipped the script. That would have been bad, obviously. Anyway, there was a gap down this morning. I put it on one of these charts. I don't remember which one it was on, but it doesn't. I bet it's not even still there. Come on. Now, maybe I put it on the Q chart. Okay, well, we can see it here. It should be here. So, and actually, it's still open on the. Unfortunately, it's still there, so it could still affect us Monday. The Qs have a little bit of a different anomaly. That fact, they didn't sell off hard enough to really get into that. They didn't sell off hard enough to get into this huge gap from the other day. Here's the SPY. The SPY still has a small gap, a small bearish gap from this morning open. And boy, the SPY just barely got into that gap. I would have felt a lot better if they would have got more of the gap. But that may be, if the market's really bullish, sometimes a bullish market will leave tons of gaps open behind it. Gosh, you got to be huge. Right now in this market, which has been a very bullish market, we left a giant gap open here between 511 and 520. There's buyers there that were unable to get on the bus that probably had FOMO and probably ended up buying at higher prices. But still, that gap, it tells us, hey, then this gap was open, but they've been into it twice the same day, and then they touched it a few days. There was buyers there. There was another open gap in the morning. Buyers there. There's one, and there's a giant one on this chart, on this page. Oh, yeah, there it is. So there's 1, 2, 3, 4 bullish gaps underneath. And obviously, we've had a lot of bullish momentum, and there's really nothing on top of this as far as open bearish gaps that I see. All right, well, let's look at option strat. These trades are getting ready to close for the day. Thanks for being here, you guys. Looks like there's 3 of you here, and I appreciate it. I didn't have a lunch update. I was going to, but I ended up, I just didn't feel, I was up late last night. I didn't feel great, so I went back to sleep, took a nap about 11, and didn't wake up till about 2, super groggy and stuff. And but anyway, but I want to have an end of day update. Let's because we've been looking at a bunch of trades, so let's see how they've been working out. I showed somebody this one that was bearish. This is a good example. This one didn't work out, or did it? Because it was $158 risk. It's worth about that much in profit now. It was a looking for 575, which would have been totally closing the gap. Which was aiming for that gap. But you saw we didn't get much of that gap, but there's still enough of the broken wing butterfly left over. I had something like this on in real life. I got it from my nap. I took it off, and it's now a free trade. I reestablished it. It had the same amount of profit as I had risked. I took it off and reestablished another one for next week, similar, a bearish one. Anyway, but let's look at the rest of these, because these are getting ready to come off the board in 9 minutes. Bullish earnings traded on Autodesk. I don't even remember that one. That one was a risk reversal from probably last week that I probably did in the wrong week by accident. Okay, let's see about this one. We were talking about Webull, because this one, just on math, I love the math on it. It was this option, this 13.5 strike option, was going for $1.07. It's still costing about the same, but it's because the stock pulled back a little bit. So if you did that, you're probably going to end up owning the stock. But I think that's fine. I mean, right? What's the matter with that? What's not to like? Stocks only go up. This is DeFi related. It's way down. It went public at like 80. It's down on the lows. Or no, actually, it went public down here. I did not see that. Was it a SPAC? It looks like it was a SPAC. Came public around 10 and then jumped to 80. I forgot the details on it. Anyway, so it's it has liquid options. A person could pick this up and try to will it, try to hold it for the long term. Anyway, let's get a longer term chart. So did it really go from 10 to 80? I forgot about all that. Well, anyway, all right. Well, sorry about that. Okay. But that's why that one has tremendous option volatility, is because it's tremendously risky. So, I mean, use your own judgment. All right. Bullish. Okay. This one is only miss of the week. Sorry about that. There's no way to know in advance. This one just missed, and it was a full miss. The only consolation on these is if you'd done a lot of other strategies, you would have lost a lot more. I use a defined risk and spreads to make sure. If there had been a spread, it would have been really ugly if you'd done something like sold a strangle or straddle. But it's fine. It's to each his own. Okay, so. The Zoom one, and I did this one, or did I do this one? I did Zoom, Baidu, and a Snowflake in real life. And that's about how it worked out in real life. It's made a little bit. It was a little about a push, kind of call that a push, tie maybe. Palo Alto was a good winner, and it was in the flat spot. It was nowhere close to the bonus territory. At least I'm sharing the screen today. Okay, now these aren't on me. This 3.6 million, that's on Jay and Scott over there at YieldMax. They're the ones that did that. That was just a synthetic covered call, right? I look at this. They're just totally exposed to the downside, 100% of the downside. I don't see why these guys don't just. Well, I do see why they don't just. Do something like that. And they don't do it because of the extra expense. It would, over time, it would hurt returns too much. Yes, it would cut off some of the big outlier down news, but I guess I know from testing it would hurt returns too much. But I just say cut, or I wouldn't even use a synthetic there. I would just use a deep in the money call option about a 75 delta or 80 delta, maybe even a 90 delta, but only spend about 20% of your money, keep the rest of your money in cash and T-bills, and do your option overlay strategy. That's the way I do it, but it's whatever. They're doing pretty well, right? They're doing pretty well. All right. So, but that one's not on us. Okay. The target trade was a good one. I should have done that one in real life. But I had a losing hedge trade, a winning. This week I had a losing hedge trade earlier in the week. Remember, I kept saying this thing won't go down anyway. I had that winning hedge trade that I showed you guys. Then I had Snowflake, Baidu, and something else. So I have been kind of worried we would fake out over the 200-day. Now, today, even though we pulled back, we didn't fake. We are still well over the 200-day moving average. So today was just standard by the dip to me. Nothing to see here, nothing to worry about so far anyway. But there's that Snowflake trade. Let's trade for next week. There's that CoreWeave trade. That one we got well into the bonus territory. In fact, we can't even see the flat spot anymore. The flat spot's down here at 60, and this thing's trading over 100. I mean, heck yeah. Heck yeah. I do know one person that did that. And I love this trade right here. This expired. We need to put I showed this trade a long time ago. And it was how to hedge with Tesla with the broken wing butterfly. Man, why didn't I do this trade in real life? Look at this one. You put it on for a credit, $400 credit on it that just ties up $1,000 to put it on, or cost $1,000. Now you're selling deep in the money puts, and there's exercise risk, but Jackson, what are you looking for? What are you doing? What are you doing? All right. So we have 3 minutes left. All right. Well, who has earnings next week? There's one earnings. Somebody's already told me about earnings next week. So who has earnings next week? Who was it? But let's it's a Palantir or NVIDIA. It's NVIDIA has earnings coming up, right? NVIDIA hasn't had earnings. Let's look at something here. Pre-earnings, NVIDIA, yeah, and I've already shown one, but this is good in case it trends up over the weekend to have something like this on. Usually, I've known stocks, especially good stocks like NVIDIA, will trend up into earnings. We'll see. We shall see. All right, guys. Who else here? Hey, Mark. How are you doing? Hey, Retired. Thanks for being here. Thanks for sending me those prices the other day on MicroStrategies. Marky Mark. Oh yeah, Marky Mark. So Marky Mark got you a $25,000 distribution on Pulte. That's awesome. So just specially for Marky Mark and the other people like Marky Mark, we're introducing a new service here at the Max Factor metric service. Metrics are us. And we're going to start trying to predict the Pulte dividend, or we aren't going to predict it. We're going to know how much money they have to pay it with, and it'll be whatever it is. We'll let Retire on Dividends predict it, but we're going to start tracking it. We've already started today, and they're just in the past 2 days. Well, actually, Retire. Well, if you're still here, I need to talk to Retire. I'll talk to you later, but I need to figure out if we're on the right schedule. I need to figure out how far behind these guys are paying. I guess I just need to watch Retire's content and I'll know. But anyway, we're gonna know where they stand. Check this out. Now, it's not much to look at. It's a little rough around the edges, but Pulte trades. Look at that. There's the trades. There's the bottom line. We know every cent coming in, every cent going out. My dad would be so proud of me, or he is so proud of me, I'm sure. I just don't know if he's watching the show. He's probably doing something. Hopefully he's doing something fun with his day out there in California. Hopefully he's, on a walk at the beach or who knows. But anyway, so look at these guys. They killed it. They sold $3.6 million worth of premium, which is about 198%. Yesterday, the day before yesterday, they sold 2.7, which is about 148%. They're also making trading profits. They made 5 million 2 days ago. They had a small trading loss yesterday. They had to roll something, who knows, whatever. They have 442 under management. We can look at the same thing on Misty, and then we can also chart it out on Misty. So these are days for Misty. The red line is the money that went out, trading losses. Green line is trading profits, and the yellow line, well, the yellow line's net. Green's income, red's expenses, yellow's net. So you can see last Friday, these guys at MicroStrategy's about $32 million day. They closed some winning trades, did a great job. Had small losses on Monday and Tuesday, but then coming back, and I bet they have a. We'll see how they do today. As soon as the trades get here, I'll download them, and I'll have an end of the week Misty special. But we can look at Misty, so we can look at Misty. We can look at all of them. So here is my sheet that compiles all of them. I just have one line on, and we're also looking at ULTY. Look at the Alti trades. No other influencers tracking. No one cares about ULTY, but I love this freaking thing. So these guys, and this is just in one day, they brought in 56 million, spending 52 million to be fair, but they had 4 left over for themselves. So that just on NAV, that's about a point and a half of NAV that's worth. But if you break out the option premium, it was $1.8 million. Comes out to 63 bips, which would, if they could do that every day, it's just one day, that'd be 138%. So anyway, I hope you guys like that new feature. But if somebody wants to volunteer to help me, I wish Corey was still around. She could take what I've done in 30 minutes. She could take what I've done and then make it look like it's something that a business would have. It would look at columns and charts and colors and instructions and everything. That woman is so smart at what I'm looking at, and I've learned a bunch from her. She has helped me a bunch, probably a lot more than she wanted to. And I've saved all her work, and I have some of her formulas where she showed me how to do things. And maybe I didn't understand at the time, and I'll still go back and look at that stuff. So I just need to get serious about this spreadsheet. Anyway, I'm glad that you're here. Hey, Norman, how are you doing out there on the West Coast? Hey, yeah, happy Distribution Friday to everyone, Norman. All right, I said hi to everybody. The market's closed. What else do you guys want to look at? Let's see. Let's kind of look at let's look at the buffer report, and let's see kind of how everything else closed. I was looking at my tasty trade. I was flat on the day. And I considered that good because the NASDAQ I'm looking was, and I would consider the NASDAQ my bench. I benchmark myself to the NASDAQ. I'm a tech trader, basically. That's what I focus on. So even with my brother-in-law's account, that's, anyway, so the NASDAQ was down about 1% today. So to be flat, I was glad. And I guess we can look at how that happened. Let's see how my diversification helped me. It, was hurting me earlier in the week. It doesn't help all the time, but GDXY was up 1.9% today. So that was a case of diversification helping me out. My YQQQ, which I still have quite a bit of, 13% or something, was at at 0.8%, and I have 13% of that, so I get 13% of 80 bips, whatever that is. That's really easy. That's like, that alone is worth 9 or 10 bips to the good. So, and then you add in this GDXY, I have a pretty good portion of that. Well, anyway, and everything else was doing bad, obviously. ULTY was, even though it was doing bad, it wasn't down as much as the NASDAQ. It was down 0.2. GPTY, basically a NASDAQ tech fund. I mean, they're all NASDAQ tech companies. That's why GPTY is my favorite, and also LFGY. But I'm just more into the blue chips, as you guys know. But my LFGY was down 2.7. Whatever. It was up so much earlier in the week. That one's been good. That's one of my only. I was going to say, am I up on that? I'm not up on. How am I not up on it? Oh, yeah, I'm up. Bought it at 36.93, and it was trading at 39.50 today. Killing it on that one. Killing it on that one. TLTW was also, I don't think I have very much of that. Thank the Lord. That one was also, but it was also up a little bit. All right. Now we can go to the buffer report. Right there looks like the ULTY trades, or not trades, positions. Was Oklo? There's no way Oklo was really up that much. Was Oklo really up that much? I thought it was that. That's probably got to be up. That's got to be an old chart. No, not at all. Look at that. Boy, that's a post earnings run. I think we did earnings on that, and it was profitable last week. That's wonderful. That is really nice. LFGY, on the other hand, had a little more problem, down 2.7. Average stock in the universe was down a little bit less, but GMA up 6.9% was the only thing holding that one in there. Then let's go over here to the index buffer report, see what's shaking in index land. Okay, Y-SPY 1.89. Let's look at Y-SPY and see if it was on, if it went X. It's about time for it to. I bet that, yeah, that's what happened. Because look, it went from here to here. It just may not say the dividend here yet, but that's what happened. The last dividend was on the 25th, and it's the 20. Yeah, that's it. All right. Well, so let's see. They did 81 cents, and then they did $1. So they did $1 first, and then they did 81 cents. So the next time, are they going to do 20% less than 80%? Are they going to pay 64? And the next time after that, are they going to take? Is that going to be 52? And then are they? You remember when these things first came out? I was in Rod's Discord all the time, and people were saying, "Okay, well, look at this, and we'll take a look at it." People were looking at it. And saying, well, this thing only goes down, which is true, but but also, and the dividend only goes down, because the first couple of months the dividend had only gone down, because but then and everyone kept saying, or the people that understood how it works would say, well, when volatility goes up, these will, the dividend will go back up. And sure enough, that happened, and the dividends do go up and down. But yeah, unfortunately, the price just goes, the NAV just goes down and to the right. That is definitely true. But when these first came out, it was the NAV and the dividend. The dividend did like 4 months in a row, just like it did it every time. I mean, I guess we could look. I don't know if it goes back that far, but anyway. But we're beyond that. Everyone got beyond that. These can be these, not just these, any of these sell options can, especially in the daily time frame, can give you or the weekly time frame, can give you a bonus when you have a pop of volatility. Exciting thing is that the ones like MicroStrategies and Tesla are, for whatever reason, some things like those are able to have their NAV go up at the same time the volatility of the asset goes up. Tesla's NAV rise at the same time Tesla rises sometimes, giving it convexity and a tailwind, the kind of tailwind you usually have when you're trading puts during a crash or something. And even though that's awesome that helps you out with puts, that happens only once every couple of years. Do you get a big down move? But tech stocks go up all the time. MicroStrategies, I saw a chart the other day of MicroStrategies, and it's able to go up at times at the same time its IV is increasing. So that's that's awesome, of course. Norman, you have 5,000 shares of ULTY. Well, I'm glad. I'm glad to hear it. So, and I'm also doing that for you. Then it's for everybody. So, since a lot of us have a vested interest in ULTY, I like it. We're going to cover it no matter what. I wasn't talking bad about ULTY. I'm talking more about that it just has 200 million under management instead of $1 billion. I don't see why it's not $1 billion fund. I don't see why it doesn't have more, but yeah, I realize there's a lot of you guys that have a very nice amount of it. And I have another brother-in-law, a different brother-in-law. He manages his own money, but I talk to him all the time, and I bet you he has ULTY. So no, I'm all about ULTY. I'm all about ULTY, but I really like GPTY and LFGY's model also, the way they do it. So, all right. So what else do we have to talk about? So we got the options closed. I showed you guys anyone wants to volunteer. I don't have any secret formulas in those spreadsheets. I'm thinking about just posting them in Discord. Maybe somebody will have an idea, just on how to, and I'm not just on maybe like, there's got to be a way to format them better. Because here's what I'm thinking. Here's what I want to look at. Maybe retirees watching this. I'll figure it out too. I know I can have AI help me, but every time I try, AI doesn't seem for me to be that much of help on spreadsheets. And AI is not that good at options either. AI doesn't get a bunch of stuff. I mean, AI has the Dunning-Kruger effect on options, and just parrot stuff it hears other people say that's wrong. Anyway, so but here's what I would really like to do this weekend. Okay, so I guess this page is ugly, but it does what it needs to do. I guess it just has the trades and then it totals everything up. Okay, I guess that's whatever. But this other page right here, I want to be able to look at everything on one page where every line, just the line, not the trades, but just the bottom line. And there's Misty, there's Palti, and there's ULTY. And I want to just keep, and eventually I want to have all of them. As soon as they pay a dividend, we'll put them on here. And also I'm going to try to figure out how to automate the trades being downloaded and cut that part of it out. But I'm trying to look for a nice, attractive thing here where I can have them, all the trades in one place, and then where it'll output something like this. But then something, so it'll be like, it'd be awesome to see. I don't want to spend a lot of time, and I don't want to talk about, hey, they rolled this strike to this strike and this cost, because Retire does that. And I don't think the details, that we talk enough about strikes and stuff anyway, but just to know, okay, this is how much this was the trading profits this week, and this was the yield. I think that would be a value to you guys that traded a lot. So that's why, or that have it, or just cheerlead it. So anyway, that was my idea. So I really need to work on this consolidation sheet this weekend. So I'll ask ChatGPT what to do about it, and I'll look at some other things. I thought I'll show you guys that some other time. But I really hope that that we get a lot of value out of it, because I know a lot of people really have a lot invested in Palti and Misty, ULTY, and it would be awesome to be able to see that. The buffer report is archaic. It just shows how much the price compared to one to the other. And I guess that's all right, because really that's kind of bottom line. The price encapsulates everything that the trades are trying to show us, or it's supposed to, if the market's efficient. That's actually not a bad way to do it, but I think this would be a lot better way to do it. So I'm excited about being able to present it to you guys. Sorry we didn't have a lunch update. My apologies. Like I said, I fell asleep, took a nap, and but this weekend I'll try to get caught up on all that stuff. I'll try to get that spreadsheet straightened out, but I would love to just Monday morning open it up and have a color graph, and we can look at ULTY, MISTI, and PLTY. I guess I should also add, I've been saving the trade, so I could also retroactively, if I can make it easier, I'll go back and add NVDY, because that would be a good one. I want to have maybe the top 5, so we'll do MISTI, Platy, NVDY, Coney, and I don't know. And then I just thought about ULTY just because we like it on this station. So we'll follow that one there. Guys, what are you guys going to do this weekend? I'm giving Jackson a bathtubby. I got a brand new thing of dog shampoo. Of course, the price is higher than it was last time, just like everything. Everything's gone up 30% in the past year or 2 years. Because you buy dog shampoo. I do. You give them a bath once a month, maybe even not that often in the wintertime, but in the summertime, something like that. It depends on how often he, rolls in the dirt and stuff. But yeah, and it's 30 or 40% higher than it was last time, but everything is. His food is, all the dog stuff is. But guys, I appreciate y'all for being here. We had a pretty good crowd today, 12 of you. I like to see it. I guess Ethan's not here. Let's go here. I want to make sure I'm not missing anything. People in our Discord, what? Here's the next big thing in our Discord. I can tell people are, oh, geez, I hadn't seen this yet. MicroStrategy faces class action. Well, that's hopefully. I thought that doesn't look like it has to do anything with options. I thought it was MISTI that was in trouble. It's MicroStrategies. That's bad too, but that's bad too. Not as bad. But the next big thing, or the thing that people are talking about, is what I was looking for: the Roundhill weekly pay, and also the Roundhill leverage single stocks. Yeah, in VW. TSW, AAPW, CO. Okay, so let's look. The one that's been around the longest was in VW. Is that correct? Let me look at this. I'm trying to explain why this isn't on the buffer report yet, because people love these, and these would probably be or not the buffer report, the max factor. And these would probably be maxing out the max factor, but it's not fair to put them on there because I use data that involves trending, and I need about a quarter to at a minimum. And if I can put one on there early, physically I can put it on there and it'll still output a number, but it outputs a number that's too high compared to its peers. All right, but let me check here. But it won't be long, and these will be on here. Let's hang on. NVDY. Okay. NVW did worse on the way down, just like we'd expect. Because that's leverage, 20% leverage. It looks like it did about 20% worse on the way down, just like it should, right? The other one was down 7,500 at the worst. Well, it was down from 10 to 7,500, so that's easy. It's 25%. This NVW is down to 6,250. So that's, what is that? That's 38% or, yeah. So 38 compared to 25. So the difference is 12 or 13 on a base of 25. It's 50% more. It's a small sample size. Now let's look at the dividend, though. Is there a difference in dividend? One paid $4 on 40, one paid $4 on 15. So no, the NVDY is better. On dividend, by a lot at this point. So But anyway, but back to there, 219. So this one has been on long enough, I think. Let's go here, NVW. So I will make sure it goes on. Some of those other ones are newer, right? See, it's keying off the 20-day moving average, the 50-day moving average, and the 200-day moving average. It's one of the things it looks at. They can, but here's all the information you need. I mean, or here's a lot of it. You can, here's the average true range, the assets under management, you know, everything, the performance for the week, for the month. It has everything you need here. So the max factor just takes this and puts it in a easy to look at thing. So let's look real quick. I'm glad you guys mentioned that, or I'm glad I thought of that. Yeah, I figure, Norman, you're a big movie fan, right? I know that you were at the Star Wars. You post sometimes on Facebook when you're at a premiere or something, and that's a great place. Living in LA, do you ever go to Westwood up there to the openings, or do they have big openings all over town and you don't have to go to Westwood? That's just where the tourists go. I don't know. My aunt used to live out there, and she went to UCLA, and they used to love to go to Westwood and go drinking or go to, I don't know, and go shopping and stuff. They always said Westwood was a blast. But Norman, I realize, I think you're a South Bay guy, aren't you? I'm betting you're a South Bay guy by the movie theater you go to. So. But anyway, yeah, I'll be anxious to see how that movie was. I'm not a big movie guy. The last movie I got excited about was Tarantino, the Sharon Tate one. The Elvis movie last summer was awesome. And also, and I hate to say it, but one of the best movies I've seen this year. Somebody drugged me, not even to it, made me watch, set me down in front of the TV, made me watch it. But that Trump-based movie was awesome with the guy from whatever. I really enjoyed that movie. I really enjoyed the Elvis movie. I like movies that are about. I don't like movies that are like Star Wars and fantasy type stuff. Or I like movies that are about things that really happen. I guess that's why that Trump movie was good. That Elvis movie wasn't very realistic, but it was kind of that Elvis movie from last summer, maybe 2 summers ago now, was spectacular, I thought. And then of course the Tarantino. I'm always a sucker for those crime and those types of movies. Anyway, okay, so but have a good time at Mission Impossible. Okay, so Mark's going to study inertia this weekend. Good. Okay, well I might have some thoughts. Maybe I'll hit you up. But, all right, so I was talking about something else before I got sidetracked on movies. What were you talking about? We were talking about closer to Long Beach. Okay, closer to Long Beach. So I mean. So do you live in, what's it called? Rolling Hills? Do you live in, what's that ranch? What that big, where they have horse ranches? It's a really nice subdivision built in the 60s with a bunch of ranch style homes on top of that point out there. What's that called? And there's many neighborhoods. It's a conglomeration of neighborhoods, but man, that's beautiful out there. That area is beautiful out there. I remember they used to have a SeaWorld out there, but it's shut down or something. But anyway, that's just, I love that area. The South Bay and on further, it's just gorgeous. Just absolutely gorgeous. Those, the views you can get on top of whatever that hill is right there, looking back to the north where you can see all the way to probably no telling all the way to way past Malibu, all the way to the next thing that's past Malibu. It's gorgeous. Not to mention, you can see the jets landing at LAX, and you can see they call that the Queen's Necklace. Man, it's stunningly beautiful out there. Stunningly beautiful. All right. But yes, let's look at this real quick. Let's get into the high yield technical analysis, and let's make sure NVW's in there. It should be in there, but it definitely has enough time. And then we'll run it real quick, and we'll see where it'll stand. Let's see here. I need to make a space for it. Well, I guess I'll just do it like this. NVW. Look at that. Easy peasy. Now we don't have, it hasn't been around long enough to do to look at some metrics. But anyway, let's see what we have here. So those are the worst stocks. Sort it this way, or I'll sort it the other way. Oh, darn it. Okay, so here's just the max factor, the main. This includes everyone on the list. This needs the least amount of time, so it includes everybody. So, but it's also not the best metric. It's a decent metric though. But number one's NFLP, number two's Maxi, number three's TSLP, number four's Carvani, number five's Coney, number six is NVW, number seven is iDevo, number eight is Snowy. Number 9 is MSFO, then MSFY, then Dizzo, then Clip, then GPIQ. All right. So, but now we're going to look. Let's look at a better measure. On a better measure, it goes Coney, Maxi, TSLP, NFLP, AMD, Tesla, Dizzo, QDTE, ULTY, MSFO, Infly. This one right here, when I say it's a better factor, what it does, it takes the max factor, but it also takes your 1 year yield. Your trailing 12-month yield. So NVW is not going to be on this. And so, but of the ones that are a year old, these are the ones when you figure the momentum, this also figures the momentum. We also need the price to go up, right? We want the price of the parent asset to go up. But really we just need the price of whatever we're in to go up too. So this measures, these are the ones that the price is going up the most and they pay the highest yield. And it doesn't matter how risky they are. This is regardless of how. This is just go with momentum. Just doesn't look at any risk, any type of value, nothing like that. These are just the ones that go the hardest, pay the most. Maxi, or so number one's Coney, number two's Maxi, and then TSLP is a good one. NFLP. And why are those so good? Well, let's look over here so we can look. The trailing 12-month dividend on TSLP is $7 on 21, so it paid 33%. It paid a 33% yield, and also, if it's on this list, it means it had really steady NAV. It actually means its NAV's going up because that's what this list does. It finds the ones that are the hottest. So looking backwards, just like anything in technical analysis. So these would have been good stocks to be in a week ago. These may not be the best ones to be in next week, or a month ago or whatever. And a lot of us are in these. We don't have to look at these silly numbers. We can look at the stock chart and we can see, hey, this one's going up and pays a good dividend. I'm just trying to look at a way to quantify it. But that's impressive that TSLP does that. NFLP paid $7 on $39 on a $39 price. So that's, it's nothing like yield max, but they're ranking higher than the yield max funds on this scale. I mean, and it's just because the yield max funds, even though they pay a little more, they don't do quite as well on NAV. And so that's why they aren't quite as high on this chart. You can see right here. Let's just compare Tesla to TSLP. So in the momentum factor, which is A factor and B factor, TSLP is a 5 and a 14. TSLY is a 2 and a whatever, and 2 and a 0.8. So TSLY doesn't have the momentum TSLP does. Now, but there's two sides to it. TSLP paid a $9 dividend and it costs $9 right now. So that's 100% on a trailing 12-month basis. So it has to factor that in as well. So it's not like an avoid, but it's not as good mathematically as Coney, Maxi, TSLP, NFLP, AMD. Look at darn AMD. I mean, gosh darn it. AMD, TSLY, DISO. Anyway, and I forgot this is the in this factor. This is the max factor. This one also factors in risk. It also factors in risk. I mean, these are the best right now: Coney, Maxi, TSLP, NFLP, AMDY, TSLY, ULTY is on there, triple QI is on there. If we don't want to factor in risk, no, I'm sorry. Okay, here's the max factor. Here's the one that factors in everything. Coney, I need to just start quoting this one. Coney, NFLP, Clip. Now, how is Clip on there? Let's go look. I mean, what the heck, Clip? Are you serious? Okay, it paid $13 in dividends on 31. Okay, Z factor's a 1. The higher, the better on here. So, I mean, at least these are both pluses. So it has momentum. That's a plus. It's average true range. I use the average true range in the beta to figure the risk, but then the yield's 41%. The momentum. I mean, it when you put everything together, even though it's one that you want to think of, then after Clip is TSLP, then Maxi. Maxi's a little bit lower because it has gigantic amounts of risk and it has less yield. So that's why just looking at Coney, the one thing that separates it is the yield. Not that it's a totally avoid. It pays 25%, and it does well too. Then look at that. GDXY is on here. Now that surprises me. What's it doing on here? How's GDXY on here? Oh, I know. And I thought about this yesterday too. This is because GDXY, you wouldn't think would be on here, but the reason it got on here is because it has such low risk. Think about it. It runs in compared, because I measure the risk. It's how volatile it is compared to the SPY. So I use the beta for the risk, and gold has negative, or GDXY has negative beta, so to the SPY right now. So anyway, it gets extra points for its safetiness, or for safety. But then after that is MSFO. See, I never even think about MSFO. What's it done? MSFO is done, paid $5 on 17. So, it pays pretty decent. Of course, it has momentum because it wouldn't be on the list if it didn't have momentum lately. That's just because the market's been going up. Of course, their underlines are all going up. Pays a good dividend. And it has a good total return in relation to its risk. I factored all those in. So some of those are kind of stealth good funds, and then some are ones that you would expect. Like I would expect Infly would be on there, but it's just kind of weird that Infly is so much lower than NFLP. Then we can look at the worst funds. Zomo, Murni, USOY, IWMY, Aptly, THTA. And this just means worse right now. These could be the best ones next week. But HYGW, that's high yield corporates. TLTW, I'm a proud owner of that one. NVDY is on the bad list. What's going on with NVDY? Well, one thing, it's A factor and its B factor is underwater. And I guess it just hasn't had that good a return. It's pretty risky, but it has a good yield. But anyway, hope you guys find those interesting too. All right, so Mark's grandson lives in Long Beach for decades, worked at StarKist after he retired from the Army. He served in the 3rd Infantry, retired as a Master Sergeant. Well, thank you for his service. Last post was Fort Myer next to Arlington. All right. Well, Norman, have a good time. Enjoy California. Enjoy Mission Impossible. Mark, you have a good weekend as well. There's still 10 of you guys watching. I'm really starting to like the Max Factor more. I need to make a long video and explain exactly how that works. But I've done it several times impromptu here at the end of the day in these shows. But I think that can be a valuable tool. And I also I could only update it once a week, and it was a pain to do. I figured out how to automate that. So the goal this weekend is to automate the other stuff, to automate the retirement simulator or whatever it's called. Used to be called the retirement simulator, but now it's more like the retirement database. So I took the simulator stuff, I took the database from the simulator and started making rankings from them. Because what I realized is all anyone cares about is, all anyone wants to do, and I get this, is know which one's the hottest one. But this NVW, for real though, we will keep an eye on that. And the fact that it is high on the list that it can be high on. I mean, I have like 50 of these on here, and it's number 5 on the Max Factor. This Max Factor is a pretty good metric just by itself, but all it measures is price momentum. It doesn't measure yield. So in other words, on the Max Factor, IBM might be a better stock than Tesla. Just on the Max Factor, if IBM was up more that week than Tesla, and also in relation to its own internal volatility and stuff, even if other things were equal. So the Max Factor is good. It's an input, and it's technical analysis. It just shows us what's going up. These are the ones that the price of the assets are going up. These are the ones, the lowest ones, of course. What happened to Abney? I thought Abney was a good one. What's going on with Abney? Come on. I think it used to be a good one, but well, it is red. I think I have a bad number in there, obviously. It's red, but I don't know that it's one of the worst ones out there. So, yeah, there's a bad number there. I'll go fix that this weekend. Okay, Abney doesn't deserve to be there, but YQQ probably does. Let's go look at YQQ. And we, of course, it's an inverse fund, so we know that, But yeah, it's negative. It's underneath its moving averages a pretty good amount. Anyway, the ones that's down there YQQ should be down there. The one that's down there that shouldn't be down there, that's alarming to me, is Zomo. Aptly. Let's look at Aptly. They all can't be at the top. The other thing is this just compares them all to each other as well. But yes, Aptly is well underneath all its moving averages. That's negative momentum. It's 6. Yeah. Okay. All right, guys. I'm going to let you go this time. I really am. I appreciate you guys being here, and you have a great day. There's even one more that got here. Norman, Mark, everyone, you have a good day. Hit me up in Discord if anyone wants to talk about anything this weekend. All right. See ya. What are you saying here? Now I'm going to stay a little bit. Yeah, Zomo and Aptly don't move much. And lately, and I don't watch them that much, but that's why I invented the Max Factor, because I just want to know. Like, if I would have had the Max Factor, I would have been out of AMDY earlier, and some of the other ones. I just want to stay away from really negative momentum in the future. Kind of do an overlay, put momentum, factor in momentum along with yield, And of course, with total return. Total return is the true serum. All right, guys. Thank you very much. Have a great day.